property prices double every 7 to 10 years. Now, guys, this is a research I've done and to put this thing together, and also my experience as well. So huge demand for rental properties, because guess what? Of course, with Brexit, we won't have the influx of people from all over the world like before. However, there's still a huge demand for rental property. Not building enough property. They can never build enough properties. Rent rate increase at about 6.2% per year. And at the moment, interest rate is very, very low. So it's, it's really easy for you to get on board and get your property, okay? Now, how do I go about purchasing properties, okay? So steps to follow, right? The first thing you need to do is to, and especially, and that's the reason why I said this lesson was for people from 17 plus. Now, if you're a responsible 17-year-old, it would be good if you get like a credit card, right? And you're going to see why in a minute. Now, remember, guys, this is not advice I'm giving you. I'm just sharing what I know and how I go about doing stuff, because I don't want anybody to go and say, Mr. Hamilton or Marlon said this and I should do this. You understand? So that's clear. This is just what I do, right? And I'm not telling anybody to do it. I'm just sharing with you because I love sharing, okay? Now, what you could do, you've got this card named Granite, you've got this Vankers and Aqua, right? These are really good for newbies, coming onto the credit card market. So, and remember, guys, people might think, oh, a credit card isn't good. A credit card, it's really, really good. And you want to use a credit card to pay for everything but remember, always allow 5 days minimum to repay your credit card. Because what they normally do, you buy something with a credit card and you pay it off within 60 days. You don't incur any charges at all, any interest. But it's credit card that build your credit ratings, okay? Another thing that I didn't put on here is, in the UK, it's good to be on the voters register as well. That's good when they do the credit search on you. Okay, the more times you use your credit card, the better your credit score. Because if you know it's called credit score. Now, how to find the best credit cards? You can use MoneyQuest, you can use Money Supermarket. And also, guys, it's really important that you check your credit ratings all the time. Now, a good place to start with is either Experian or Equifax. Now, Call Credit is they check your file and all your scores are on there. A score of 800 points or higher is better, right? Okay, it's better. Okay. Now, how do I go about buying properties again? Now, how do you increase? Actually, I'll give an example, guys, right? This guy, I was telling him about my strategies, I buy properties without using my own money. And he was like, and when I told him, he didn't believe me because he thought I was lying. I'm like, I don't need to lie to you. I could take you to a number of properties now. He was like, well, the way you're saying it doesn't sound real. I said, okay, then listen to what I'm going to do for you right now. This guy is, is okay. He's got lots of money. And I said, this is what I'm going to do now. I said, have you got a credit card? He said, yes. Okay. I said, okay, what are you going to do now for me? This was in the midday. So I said, what I want you to do for me, I would like you to call your credit card company and we're going to increase your credit card limit double the time it is. I said, how much is a credit card limit? He said, £10,000. I said, okay, we're going to make that credit card goes to £20,000 limit. So he said, okay. And he said, okay, then what I need to do? He said, okay, what we're going to do now, call your credit card company now. Have you got online banking? He said, no. Online credit card banking? He said, no. I said, call your credit card company now. He went on, he contacted his credit card company. And I said, I want you to tell him that you would like to increase your credit limit, your credit card limit. And he said, and he called him and said, I would like to increase my credit card limit. They said, how much? He said, to 20,000. Okay, yeah, it's done. It was like, oh my God, I can't believe that. I didn't know that that's possible. Guys, it's possible. But the first thing you do is to build your credit score, okay? Build your credit score and always pay off that credit card 5 days before. Because if you miss a payment, then you're going to have to start the whole journey and it takes about 6 months for you to get clean again, okay? Now, so search for properties at or below market value. Find good deals. Another way to find good deals, and of course, this is this is not me saying it's good that people are losing their property, but first, don't take the first property. If you have cash, then go for repossessed property. So repossessed properties, you get really good deals on it. Okay. And also another thing, I remember I took a few properties first time viewing, and I could have gotten so much better deals than what I've got. You know, also I did venture into HMOs. HMOs are home of multiple occupancy. And with HMOs, basically, I was getting one. I got it and I got scared because I would have to have 6 different clients, right? I got scared and I just didn't want to be dealing with 6 different tenants because, you know, I just couldn't. When I look there, everything's set, everything is finished. All I had to do is get my solicitor. So I lost about £2,000. I just got cold feet because when I look and I saw one day I went to the property and I saw one of the guys there with, you know, he had a lot of weed on his table, and I'm like, you know, I can't deal with this. I just want to deal with one tenant. Yeah, so I didn't even bother with that HMO. But HMOs though, and I don't know if you remember, I was telling you about, I saw this. It was a pub in the UK, right? Yeah, there was a pub in the UK, and and there was 3 other properties as well, and those are like bungalows. And the guy was giving it to me for 400K, and 2 of my friends, I said, look, man, let's invest, let's get this property, right? These properties. But I didn't have enough funds. And you know what? I didn't get it. But I'm telling you, the income on that was between 4 and 8 grand a month. Right now, I'd be laughing. We would be laughing. But because I think they were too scared. Scaredy cats, man. But I wasn't scared. But anyway, guys, let's look now. So how are we going to source the funds? Okay. I'm not sure. Why is this? Oh, yeah. When the thing go, it didn't save the stuff, right? So how are we going to source this fund, right? How are we going to go about buying this property, right? So we need to source the funds. We need to also release equity. Okay, so here are the different ways we could source the funds, right? And this is what I say to some of my friends. Like I said, look, man, just release equity from your property. Your property it's not giving you anything. You're the one giving it something every month. Remortgage, right? So remortgage a property. Okay. So release equity and remortgage are 2 different things. Okay. Now, if you release equity from your property, you're just taking out a 10,000 or a 20,000 or 30,000. Now, remortgage mean you get a different rate and you start everything again from scratch. Okay. Now, of course, these things sometimes depend on your salary. Now, for example, you can either take out a limited company or not take out a limited company. Okay. But it depends. For example, if you are working and your salary is £40,000 or more, then my advice to you would be to take out, buy a property in a limited company. Because what has happened now, the government, right? They used to give tax relief on the interest only mortgages, but that's now gone. So the government now, they're charging you full amount, right? On the rental income. So before, they used to allow us to take out the interest out of the rental income, and then the rest that's left over is what they tax. Now, and why have they implemented this? They implemented this because they're saying, well, we haven't got enough properties, and these buy-to-let people, you know, who are buying up the properties aren't giving first-time buyers a chance. So let's get them out the system so they can sell off all their properties. So a number of buy-to-let owners have actually sold their properties because they're literally going to be giving the government most of their profit. And also the government is going to be paid twice. They're going to get paid from the bank, right, for the interest that the bank is charging us. And they're also going to get paid from us as well, because we're paying them more, actually, because if you think about it, we've got the interest-only mortgage, right? We've got an interest-only mortgage, yeah, that we're paying. So we're paying that to the bank, but then the government is charging us money on top of the rental income that we're getting. That's what they're going to tax us on. But it depends on how much money we earn per year. But as I said, if you're earning 40K or more, then limited company is the best option. Okay. No. So credit cards, you can use credit cards to buy your property. Good low interest rate, you could take out a loan. But if you're using credit cards and you're taking out a loan, you've got to have a mortgage advisor that you trust. You've got to have a mortgage advisor who understands the system. Of course, it's risk taken, but what you're going to lose, you probably lose about 1,500 before you know if the banks are going to allow you to do it. you know, but of course, everything that you do in life, you know, involve risk. Now, also, there's another thing here that I'm also sharing as well. The government is offering bounce back loans. Now, this bounce back loan, you can get up to 25% of your future earnings. Now, a number of my friends who have got limited companies, I've taken out this one, you know, and if you've got a limited company, you can take out a bounce back loan. And actually, the first year, it's free money for a year. And then after that, the next 4 or 5 years, you're only going to be paying 2.5%. So if there's anybody in the group, think about this bounce back loan and put it to good use. Okay. I'm not going to tell you should put towards property, but yeah, I've said it. Right. Now, listen now, how I go about buying my own properties now. What I do is I get a credit card, right? And I use a credit card. And of course, I inform my mortgage broker. The person buys a source of property is going to sort out the loan for me on the property. So I get to my mortgage broker. I've been working with him for a while. And I said, look, this is what I want you to do for me. Okay, sort it. And I've never touched wood. Every single mortgage so far, I've always got them, right? And I use my credit card, right? And then what I do, I'm with Barclays. What I do, I take out a loan, okay? Take out the loan, put it in my account, but you never take out the loan before you apply for the mortgage because they will see that. So what I do is I take out the loan first. Sorry, I apply for the mortgage and I get it in principle. Then I get my solicitor search and all of that. Then I stick this loan into my bank account. Okay. Now this loan is in my bank account. The bank might say, okay, where we're getting the source of the funds. If they send it to me, then I send the statement to them. They can see that the money is coming from my bank. You know, it's there for a while. You know, and then also another trick I have to use as well. I put it on. I put my statements on a fortnightly basis. So when they look, they can see my money in my account every week. So every week I get a new statement. So when I see the statement, they already see this money was in there. They can't tell me when, but they never really ask last 3 month statement. They never really ask for that because the money can be coming from different places. So I've got that now. So I take that loan, yeah, and I use it to get the property. Then I take my credit card now. And remember, guys, I told you how to bill your credit card, how to ask the credit card company to increase. You know, and let me tell you something. If they were going to give me 50,000, I'm say, credit card company, I want it to go up to 50. And if they ever say 60, I want it to go to 60. Okay. Anyway, so if we come back to this point now. So what I said now is this. I then take that loan. I get the property now. Okay. Now this loan, I might get it say at 14%. Now, then what I do is my credit card now, I do a balance transfer, right? Now, first thing I do, I use one of the credit card now, because I've got a number of credit cards. I use one of the credit card and I do a money transfer and pay off that loan, which was like 14%. Okay, most of the time, the lowest I've ever got like 14%. So I do a money transfer on that card, okay? So I've done that now. Now, this money transfer, right? It's zero. They don't charge anything because it's a fixed interest. You say 3 point something percent, yeah, on this thing on a monthly basis, right? And then after that, now, then I do a balance transfer. Then I do a balance transfer on that credit card with another credit card. So therefore, and this balance transfers 2 years and 24 months. Yeah, so 24 months. Sometimes you get for 36 months, depending on the company, the credit card company. No, I don't pay, and you pay about 3%, 3.4%. And then, so therefore, I don't pay any money. All I'm doing now with the mortgage, right? You know that 3.4% that I pay to the credit card, I take that from the property. You understand? I take that back from the property because guess what happened? That's expense, right? So anyway, after 2 years, I'm not going to buy any more properties now, right? Okay. So after 2 years, all I'm going to pay is that 3.2% for 2 years. And I haven't used any of my money yet. And that's how I do it. And I just rinse, repeat. You know, I bought this property in Gambia, exactly the same thing, the same exact process. That property, there's no money on it, right? And guess what happened? I basically do exactly the same thing. Loan, credit card. Now, I'm paying it back, of course. I'm paying it back, I'm paying back the loan. But of course, eventually by paying it back, you end up saying that money is, you paid it off, you move to something else. And that's the reason why I said, when you go in for properties, try and get the best properties, try and get the best deals.